Welcome to the Market Matters video update for this week. Slightly different format today. James is working from home. I'm in the office by myself today. We've got the market punching up a little bit higher today. We're testing out 7,400, but for now we're going to focus on some specific portfolio positions we've got across the board. First one, Altium takeover offer on the table at 38.50 for those guys from the US-based Autodesk. We're in there from about 34.50. Are we sticking with that one, seeing how this takeover bid's playing out?
Yeah, Harry, I think we are. So obviously the takeover offer came from Autodesk at $38.50. We've bought that stock from around the 27 mark. So it was obviously nice to see a takeover come to pass pretty quickly after we bought it. We've had a heap of questions through the pipe in recent days, if you like, just around what we're looking to, or what our outlook is for that particular stock. So I think Autodesk, I've listened to a number of insights from their product team, etc., around how they think about Altium and the software that Altium does and the technology that Altium has around printed circuit board manufacturing and design. And I think they've been pretty clear that it makes strategic sense for them to pursue this acquisition. They're not going to pay ridiculous numbers, but I think there's a very good chance that they'll pay more than 38.50, which is the price that Altium has rejected. You got to bear in mind that also, the stock did run up to 38.50. It's back below 34 now. There was a heap of shorts in this stock. So on my numbers, there was something like 4.5 million shorts on this stock. The bid came, that's now down to 2.1 million. So that's more than halved in the course of the last week or two. So look, I think a higher bid will come. I think that it's worth more than 38.50 to Autodesk. So we're going to hold now for Harry. And I think there's a pretty good chance that Autodesk will pay a higher multiple than Altium was trading at just a few months ago. So it's a longer term play for Autodesk, and I think they'll pay up for it.
Certainly. Another one in the same sort of realm, I guess, not the same industry at all, but Crown. We had that one from lower levels. That's had a bit of a corporate play as well, and has pulled back a little bit. Are we looking to sell that one down here, or are we hoping that one continues to play out?
Yeah, I think we're holding this one. I think it's probably the place to be buying it again, to be honest. We're not going to add to our position, but I think it's, from a risk reward perspective, I think it's a pretty good play down at these, near the $12 mark. So just to give you some background there, obviously Blackstone was the first to come to look at Crown. They put a bid forward, which was rejected. They've now increased their bid to $12.35. That's been rejected by Crown. We've got Oaktree, which is a sort of an opportunistic debt investor out of the US. They've put a deal forward to take out Packard's stake. That creates a bit more interest. Stars put a deal on the table for a merger that would create a truckload of synergy. So you piece all this together and say that, I think we bought Crown because we thought it was cheap. We thought it was being hit hard from short-term issues relating to the Royal Commission into gaming, etc., and their casino operations, which has got a huge amount of valid points. I guess my investment thesis around that is they will get through those. They will be a short-term headwind that was impacting the share price. And I think from what's happened on the corporate side, it sort of validates our thinking around Crown. So it got up to 13.30, I think, from memory, Harry, and it's now back down nearer to $12, a bid at 12.35. I think the corporate interest, validates how we're thinking about this stock. So definitely going to hold that one, Harry.
Certainly. Another one we're going to talk about today is Zip. You did a podcast on that one yesterday. I guess the three names we started off that podcast series with have had a lot of news flow since those podcasts have come out. Zip may not be any different as well. We talked about that one in this morning's portfolio report as well. We're pretty keen on it again, even though we hold it across a couple of portfolios. Are we adding to that one shortly?
Yeah, there's been rocks and diamonds in that podcast so far. So Wisr obviously was the first episode. There, the stock, we talked about that when it was 24.5 cents. It ran up to sort of mid 30s, and then they've done a equity raise. We'll no doubt I think we're talking about that next. Zip is the one we've done yesterday. We've also talked about Austal, which had a downgrade unfortunately yesterday, and we talked about Altium, which was experienced a takeover offer. The only thing to be a little bit more mundane has been Oz Minerals that has hasn't done a lot since we talked about it, but we weren't buying at that at the time. So yeah, Zip looks interesting here around the $7 mark. Coming into they'll produce their quarterly update in early July. Which I think is going to be a positive one. So obviously there's been a lot of volatility in the buy now, pay later space, but we're starting to see some interest come back into it in what's generally a pretty seasonally strong period for the buy now, pay later companies. So we're likely to add to our position in that portfolio. I wrote this morning that we're going to trim Whitehaven, which has been a phenomenal performer in the last in the last couple of weeks. We're going to take 2% out of Whitehaven and allocate that into Zip down around that $7 area. So I think that's a reasonable thing to do. The podcast will outline more of what we're looking at and what John O'Higgins, who's our analyst in the space, thinks about Zip. But again, it's all about growth. It's all about the option and the huge growth available over in international markets, which they're going pretty hard at. So I like Zip at these levels. I think it's worth adding to, Harry.
You flagged it. It's like you could tell the future. James Wisr is up next. They raised capital just pretty soon after we did the podcast. They had ripped into that as well. So maybe a little bit of an opportunistic raise there, getting some money in the door. Can we just update your thoughts on this stock?
Yeah, so this is a business or a stock that I've liked for quite a while. They're a consumer finance business. Anyway, it's been a bit of a struggle for a while there. It's been sort of anchored to the 20-odd cent mark. It's had really strong growth in the business, but that hadn't been dropped down into really strong appreciation in the share price. We talked about it. They made a couple of really positive announcements about securitization to fund their book moving forward. That's a real positive. They ran right up into the mid-30s, which is obviously a pretty strong rally. And then they've tapped Goldman Sachs for $50 million worth of new equity. So finance businesses need equity to grow. There's no doubt about that. They obviously have a loan book. To grow that loan book, they need financing. One of the bullish backdrops for Wisr is their ability to borrow money more cheaply now than they could in the past. That's a positive. The capital raising was a big one. It was really deeply discounted at 25 cents. It was done by Goldman Sachs. So I'm completely biased here, and I don't, I'm not sure what I should say, but from Shaw's point of view, so taking the Market Matters hat off for a second, Shaw's been a really big supporter of Wisr for a long period of time. Unfortunately, Goldman Sachs, tier one investment bank, got the gig to raise the 50 million. So I think that's created a bit of indigestion, if you like, in the share price. So, it'll be interesting to see how it comes. I think it's trading around 27 cents, Harry, at time of recording. I like the story. I'm not, hugely supportive of the approach they went down in terms of the equity raise, but the story remains intact. So we're going to continue to hold that one, Harry.
I'd like to be there. Maybe look through the valley a little bit. Finally, not a stock call at the moment. rather the ASX. You're calling that to 8,000, which sounds really punchy, but to be honest, it's less than 10% away with the market up here near 7,400 at the moment. Are we heading there first? Are we going to go up by the stairs, or are we going to pull back and maybe push on?
Well, yeah, it's a hard one. Pullbacks have been a really begrudging whenever they happen. So we had one at the start of May. It dropped 3.5%, the ASX, but it was what you'd call a very begrudging sort of pullback. It wasn't aggressive in nature by any stretch. So to me, the market is going to move higher. I don't think 8,000 is out of the question. I know it sounds like a pretty pie in the sky number, just picking a round number that's got an 8 in front of it. But as you made mention of, Harry, it's less than 9% away above the market now. If you think about the May performance, we put on nearly 2.5% for the market in May. We're up 3% already in June so far. The RBA yesterday made some pretty bullish points in my mind. So they talked about obviously their inflation target and the sustainability, the economy being, CPI being sustainably above that, within that 2 to 3% range. But they also made some pretty aggressive calls around wage growth. So wage growth being above 3%, which in my mind, in this sort of environment, is a pretty aggressive call. There's as I wrote this morning, Philip Lowe speaks tomorrow about the expansion in the economy and the path forward for it. So the key takeaway from what I've got recently from our central bank is that the foot is going to stay pretty firmly planted on the floor in terms of monetary policy, as well as fiscal policy. So rates lower for longer, QE3 is very much on the table, and that's going to be supportive of the market, Harry. So that probably underpins our bullish stance in the market at the moment. And our view is that, we should be buying any pullbacks in the market, and we're, less reluctant to be, selling strength here. I think it's a case of remaining invested, just being in the right sectors to try and optimize performance from here.
Putting the money to work. Thanks for joining us, James.
Thanks, Harry.